Hello, this is Matt on the Moon Lambo channel. Did you know that as we enter this bull market in the crypto space, that retail investors are a tiny part of the reason that we're seeing the recent price surge? There's evidence to support that anyway. Institutional buyers, on the other hand, snatching up Bitcoin and crypto like crazy. So I'm going to delve into that. First thing I'm going to talk about before jumping in there is I've got a little bit of news, two or three separate pieces, mostly relating to XRP in here. But before we get going, if you would please delicately tap that like button, but don't smash it. Don't smash it. You don't need to rage hit that thing, because if you break it, when you smash it, you buy it. That's the policy on the Moon Lambo channel. It's expensive. Also, if you would, please consider subscribing, unless you hate every single word that's coming out of my mouth, in which case, okay, fine, don't subscribe. But here we go. Check this out. This is from Hodor's blog. This piece actually came out. He released this a couple days ago, but I wanted to cover this in particular because there's some, let's say, lack of clarity about which cryptocurrencies are actually going to be considered securities in the U.S. I understand when it comes to cryptocurrencies, global phenomenon, super duper, but U.S. should be a big player, and they're slowing things down, and so I want to see clarity in terms of regulation, especially on a federal level. So enter the Token Taxonomy Act here. And so here's what Hodor has to say about it. The Token Taxonomy Act, a bill currently being considered in the U.S. Congress, promises to clarify the definition of a cryptocurrency and set clear standards for when a token moves from being considered a security to when it is considered a no counterparty cryptocurrency. The Act also provides de minimis exemption for annual purchases with crypto and sets clear tax rules for crypto-to-crypto transactions in the United States. The bill would be a major step forward for regulatory clarity in the U.S. On June 18th, Warren Davidson, one of the bill's sponsors and one of its most ardent proponents, sent out the following tweet. And check this out. There are 4 points that Warren has to this particular tweet. And when I was reading this, I was thinking through it in terms of XRP specifically, right? So he wrote, hashtag Token Taxonomy Act codifies that a digital token is not a security if, 1, it's created, 2, transactions are recorded in an immutable DL, no longer modified, including by its creators, 3, transferable without an intermediary, 4, not a financial interest in a company/partnership. And so in reading that, and you kind of hope that this passes, we need clarity no matter what on this, but hoping this passes, and if so, if these are the guidelines by which, cryptocurrencies are going to be judged, and maybe there's more to it, but if this is the gist of it, does XRP not meet all 4 of those points? I would certainly think so. If there's any dispute over point 4, not a financial interest in a company/partnership, well, look, understand that the amount of cryptocurrency that a company holds when it comes to distributed ledger technology, it has no bearing on their power over the network itself. Absolutely none whatsoever. Literally, absolutely none. So, look, businesses are going to hold cryptocurrencies. Ripple. Actually, I don't know. I don't know if anybody's ever asked this. Maybe Ripple, the company, does hold other cryptocurrencies for some reason that I'm unaware of. I don't know that they do. I've never heard that. I've never heard them ask that. But what I was going to say is, companies can hold all sorts of different cryptocurrencies, and just because Ripple happens to choose to hold XRP, and by the way, Ripple did not create XRP. Look, that doesn't mean anything, because you're talking. I like what they're getting at here. Look, the company Ripple, the company, has no power over XRP, no more so than any other participant within the ecosystem. They're running a minority of validators, and you guys know the deal, right? So this should be a non-issue, but it's just super good to see this. I've been looking for clarity for a long time, and to see that at least some are trying to push this forward, it's really positive. And Hodor continues, it looks like the bill, after its initial review, is starting to become more well-defined. In addition to 2 more sponsors join the effort, John Rose, Republican, Eric Swalwell, Democrat. This is a positive development because as the list of co-sponsors grows, the greater the chance that the legislation will move successfully through the required steps before being signed into law. If you reside in the United States, I urge you to voice your support for the Token Taxonomy Act. And then there's a link here. And of course, I'm going to put the link down here for you. If you guys want to check this out, please feel free to jump on it. All right, next. This is just a fun picture, so I'm going to just touch on this very briefly. But I've talked to you in past videos about SendFriend, a remittance company that's going to be moving money into the Philippines using XRP, XRapid. And there's this little picture of them. They're running a little booth here. And check this out, SendFriend. They got this circle here. Runs on Ripple. Just a fun little thing to share with you since I came across it from @NurseXRP on Twitter. Okay, now check this out. Let's get into what I was talking about at the beginning. Sort of. I want to preface it though, rather. Look, we just came out of the worst bear market in crypto history, in particular in terms of a downward price action, not in terms of percentage. I mean, it's up there with the worst of them, but certainly in terms of dollars, right? Going with Bitcoin in particular, going from nearly $20,000 down to a low of somewhere in the neighborhood of about $3,300. And as we all know, as we sit here today, it was on the front screen when I pulled up this video. We're now, look at this, $11,103.29 for Bitcoin. Okay, now check this out. Michael Arrington, he's the one that created Arrington XRP Capital. He tweeted this out a couple days ago, and I wanted to share this with you. He tweeted out, "For those of us still here in crypto, aren't you glad you kept in the game? Just 5 months ago was deepest winter." And here's what he linked to. It's his own little piece that he wrote from. It was from his website, and I just wanted to share this thing with you, just to understand. Because look, if you went through the 2018 bear market and you're still here today, props to you, because that was tough for a lot of people for a lot of different reasons, and especially when you've put your own money into this, you got skin in the game. I totally get it. I respect it, and I went through it myself. You know, on the way down, as this bear market kept getting more intense, got worse and worse. Price action went down and down. I believe firmly in my investment personally, and I'm an XRP bull. I make no bones about that, and so I continue to buy on the way down, and it is going back up now. And I talked about that a little bit in the last video, but I wanted to share this with you before we get into the price action and where things are going, especially as we see retail investors somewhat on the sidelines and institutional investors jumping in, and what that means given the price levels that we're currently at for the crypto space in general, and again, where we're heading. So this came out, this is actually January 10th of 2019, it was by Michael Arrington of Arrington XRP Capital, and he writes, 2018 was a hell of a year. Yes, getting crushed in the market sucks, and yes, many were left shell-shocked. But as someone who's lived through a few big market downturns, I can tell you this. If you're still standing, you are stronger for it. You are a veteran of the 2018 crypto disaster. The next time the markets get you shaky, you'll handle it like a pro. And you'll tell those around you, this is nothing. I was in crypto in 2018. Perhaps your story is more heart-wrenching than most. Maybe you lost your job or more money than you can afford. That sucks, certainly. But greatness will be molded from the ashes. As I wrote nearly a decade ago, when we were just getting out of a different financial disaster, entrepreneurs live for this craziness. It's supposed to be hard to be successful. That's why the journey is so valuable. Those of us that remain are stronger, forged in fire, and less likely to break down the road when new and even greater challenges approach. Be thankful for 2018, because to truly appreciate the good times, you have to suffer occasionally too. We are excited at Arrington XRP Capital. We are still aggressively investing in new projects, and our investors are doubling down in this market. Great fortunes will be won or lost in the coming years, and new technologies will emerge that we can't even imagine today. Don't let 2018 get you down. 2019 is here and full of possibility. Amen. Amen, brother Arrington, right? And that's why I wanted to preface it. Okay, so we went through a hell of a time. All of us did. Came out the other end. We're still here. We're still alive. Look at this. And this is also on the same topic here. This is a tweet from somebody named, let me scroll up here, Nick Carter, at NIC_Carter. He writes this, and this just kind of made me chuckle. How's that Bitcoin chart overlaid on the tulips and South Sea bubble chart doing? And if you don't know what I'm referencing, there have been a couple bubbles, very historic bubbles. I wasn't really familiar with the South Sea bubble. I had to Google that, and I kind of looked it up, but not worth getting into. The tulip, you guys probably heard of Tulip Mania. It was about 400 years ago. It was in the 1600s, and there was this bubble that went on for about the span of 3 years, and people were insanely valuing tulip bulbs, actual physical tulip bulbs. And it was one of those greater fool theory type of things, and it just ran up, and there was really nothing to it, and eventually it crashed down, and a bunch of people lost a bunch of money. The people that sold early enough made a bunch of money, however. And so people were comparing the Bitcoin bubble, and it was a bubble in 2017, to be fair. It was absolutely a bubble in 2017, which popped. But understand, every asset class experiences bubbles. Gold has experienced a bubble. We've seen the stock market in bubbles. It's probably in one right now. We've seen housing in bubbles. It's also probably in one right now, arguably. And crypto right now, not in a bubble. We're just starting to ramp back up again in terms of price action here. So anyway, bubbles occur, but the people that are no-coiners or anti-Bitcoin or just crypto in general, they'd always like to overlay the graphic of the Tulip Mania bubble, which was insanity, to be fair. Like that was crazy, right? From what I've read on it, anyway. And then they'd overlay the graphic of Bitcoin. They're citing that the Bitcoin bubble in 2017, towards the end of 2017, it evolved to something that was even greater than Tulip Mania, right? And so it did crash, of course, but there's the graphic overlay saying, here, it's the same thing. There's Bitcoin. Now it's gone forever, blah, blah, blah. Well, and then if you look down here, that's the reason I chuckled, because obviously, as we know, they were comparing the two, like Bitcoin's gone forever, right? Okay, how many times has Bitcoin been declared dead? Well, it's heading back up here. And then here's a graphic of this, and you can see here. Here, I think I can click on this. Yeah. So check this out. So here's a bunch of bubbles in history overlaid. You've got Bitcoin, you've got Tulip Mania, Mississippi Company, you've got South Sea Company, you've got gold, and the 1929 U.S. stock market crash. So you can see all of them. Like they went up and then they went down, and okay, so gold's here, that's not gone or anything, but the rest of them, so like these are bubbles that popped and then seem to have gone away forever, right? So here's the overlay, and then you've got Bitcoin up and up and up, bubble pops, and it's inflating again. And that's because the crypto asset class is here to stay. And again, bubbles are not unique to crypto or any other asset class. They can happen anywhere, roughly, and if there's nothing to something, if it's more of a Ponzi scheme type of thing, well, fine, yeah, then it goes away. But as it turns out with cryptocurrencies, XRP in particular, there's real-world utility. And if there's real-world utility, humans are going to put a price on digital assets that are associated with it. So it's just not going away. And that's why you keep seeing again and again and again for a decade now, you keep seeing bubbles form in the crypto space, and within that asset class, you see it pop, and then it comes back, and it's never going away, and there are always higher lows with each passing market rally. That's just the way it goes. And so I got a kick out of that. We're like, so how's that Bitcoin tulip overlay looking? Pretty good, right? Now check this out. This is the fun piece that I really wanted to talk about here. It's what I teased at the beginning of the video. This is from Cointelegraph. The piece is titled, 4 Big Reasons Bitcoin's Price Will Probably Not Stop at $20,000 This Time. And this is again from today. It says 7 hours ago. All right. As Bitcoin's price keeps setting new yearly highs, the question on everyone's mind right now is whether it's different this time. Let's take a closer look at why this rally is nothing like the bubble in 2017. As many experts pointed out, Bitcoin going above the key psychological $10,000 mark is likely the trigger FOMO, i.e. fear of missing out, according to Fundstrat's Tom Lee, who adds that Bitcoin can now easily take out its all-time highs. And let me scroll down a little bit further here. Check this out. Now, as we all know, crypto, where did cryptocurrencies come from? Of course, we know it came out of the crash of 2008. Satoshi Nakamoto came out with the white paper, and we got this new amazing, newfangled technology called blockchain, and you can move money around, Bitcoin, with it being a currency, right? Move it around without a centralized authority, right? And that's the amazing technology that blockchain is. There's no central authority. You can move money without the opportunity to double spend thanks to cryptography, right? And that's exactly what it is. And so it came out of the ashes of the 2008 financial collapse, which originated within the United States and spread negatively economically all over the world. So people jumped in largely for ideological reasons. Many find when they find out about it, like, oh, this technology's neat. Nobody knew what it would be a decade later, and it's amazing what everything has become, sure. But understand that it wasn't companies and institutions that started that phenomenon. No. Whereas with the internet, that is what you saw. You saw with the internet phenomenon and the .com stock market rally, the .com boom and bust of the late 90s, early 2000s, that was really driven by institutional players, large companies, and then retail speculators jumped in thereafter. But this is quite the opposite of that. Rather, what you see is that retail speculators started this whole darn thing. And in the case of, in particular, the last major bull run, which culminated in December of 2017, really with Bitcoin reaching just a hair below $20,000 per Bitcoin. Wow. That was retail speculation that drove that with minimal institutional players. And it did take a lot of retail speculation to get to that point. And that's why this next piece I'm about to read to you is so fascinating to me, because we're seeing similar price action. We're at over 11,000 per Bitcoin as I read this, and again, I'm talking about Bitcoin, even though I'm an XRP bull, but that's because, as you know, all the cryptos, they're tethered to the price action of Bitcoin to one degree or another, and so I have an interest in seeing Bitcoin go up if I want XRP to go up, at least for now. Now, utility's going to win today. I talk about that all the time. I'm not going to get in all my thoughts on that because I do with some amount of regularity. If you just listen to this channel, then you'll get my thoughts over time on that. But I just want to point out again, so the retail speculation is what did that in 2017, but not this time, not yet anyway. So check this out. The little subheading here from this Cointelegraph piece is Institutions, Not Retail, in the Driver's Seat. Bitcoin broke through into the mainstream in late 2017. At the time, its historic surge to nearly $20,000 was driven mainly by retail investors. This time, however, the public is still largely on the sidelines according to Google Trends. In fact, the number of Google searches for Bitcoin is only around 10% of what they were in 2017. In other words, retail investor FOMO has not even started yet, which may suggest that Bitcoin price could go much higher than last time. On the other hand, institutional demand for Bitcoin has soared. As of June 17, open interest at CME Group saw 5,311 contracts totaling 26,555 Bitcoin, or approximately $246 million, dwarfing the volumes during the 2017 price peak. And so, and then there's other indicators that they go on to about down here, but think about that. So we're seeing price action at about $11,000, a little over $11,000 for Bitcoin. We're seeing the price of XRP here. I'll just pull it up. It's shy of 50 cents. So what is it? 48 cents, 48.25 cents per XRP. And this is all occurring with nowhere near the amount of excitement from retail speculators that we saw towards the end of 2017, which culminated in the price of Bitcoin near $20,000, and the price of XRP, fine, that didn't hit until January, but it was still, according to Live Coin Watch, got up to $3.92 as an all-time high. Astonishing, $3.92. And again, there was a lot of retail speculation that led to that, right? And in this case, you've got the institutional players jumping in first here. And so if we're seeing that, where do you think that the price of Bitcoin and XRP and every other crypto along the way, where do you think it's going to end up now that we're at the beginning stages of another bull run? Now look, I don't make price predictions. It's just not my shtick. I'm not a professional when it comes to the financial side of this. I'm an XRP enthusiast. I love reading the stuff. I love sharing what I know with you people. And now is an exciting time, to be fair. Don't buy or sell anything based on hopium. Don't buy or sell anything based on anything you see from any YouTuber, certainly not me. Look, it's okay to be excited, but please don't buy or sell based on emotion. Get professional financial advice, and I'm not that. I just like sharing with you the things that I do know. That said, where is this going? Oh boy. Well, look, in terms of XRP price, my gosh. Again, like I said, it's going to move in tandem to some degree with Bitcoin. Bitcoin, though, man, it's why wouldn't it keep going up at this point? There's no reason to believe that it wouldn't be the multiplier effect. I don't even know why can't you have a Bitcoin worth over $100,000? Why can't it be worth 10 times more or 20 times more than it's worth right now? Why can't Bitcoin have a market cap in the trillions? Now that said, I'm actually much more confident in XRP for a lot of reasons I have discussed in the past, not delving into in this video. But look, XRP is going to move in tandem. It is one of the large cap coins. It's ranked as number 3, even though arguably I'm not going to get into that in this video either. It's actually number 2 in market cap, but it's just calculated wrong by CoinMarketCap on that CoinWatch. But look, if Bitcoin's going to do that, and I believe it will, I think it's going to get up to some crazy freaking levels, especially as more institutional players jump in and as more retail speculators jump in. And what's an institutional investor? Well, it's an organization that invests on behalf of its members. And so, what are some examples? There are hedge funds, there's mutual funds, endowment funds, commercial banks, pension funds, right? And so it's just an organization that's investing money on top of, or rather, on behalf of its members, and just understanding the amount of money that's being invested in institutionally. If you drop like 1 or 2% of the institutional money, just like even just that, it's gonna, like, the price of Bitcoin and everything associated with in the crypto asset class, it's going to rocket. It's going to absolutely rocket. And you are seeing entities like that jump in. We saw this year publicly the first public pension funds announced for the first time. There's an announcement that they're investing specifically in Bitcoin and blockchain companies. But they're actually investing in Bitcoin itself, and there may have been some other coins that they're investing in as well, and that's through Anthony Pompliano's and Mark Yusko's, what's their firm called? Morgan Street Capital, I believe. And that was the first news. That was major news, and that came out, I don't know, several months or so ago. But that's just the beginning. People are starting to understand, institutional players are starting to understand that this crypto thing is not going away. There's real use for it. And there's going to be some major winners and losers. And when you're talking about an opportunity for a crazy asymmetrical return in regards to your investment, well, it makes sense to put in a little bit. It could be 0.5% of what you're investing, and that can come out to, and you've got a ton of institutional players doing this, more than billions, hundreds of billions. And so we are seeing that institutional money come in, but understand, if we were able to see the price of Bitcoin, XRP, everything else jump up to the levels that it jumped up to in late December 2017 and early January 2018, if we're able to see that happen with that level of retail speculation, but it's at these levels currently that it's at now, Bitcoin fine around 11,000, XRP around 50 cents, close to it anyway. If we can reach that with some retail speculation, but with a lot of institutional money coming in right now, what do you think is going to happen as soon as the populace at large starts catching wind that, oh, Bitcoin didn't die permanently last time? They're back, and then they're going to be FOMOing in again. There are going to be those people like, yeah, I wasn't willing to buy Bitcoin below $10,000, but I sure as heck I'm willing to buy it above $10,000, because it wouldn't buy it on the way down. Too scared, right? Everything is on sale and everybody's too scared to buy. Well, I mean, I wasn't, but I knew what I was doing. At least I felt confident in it. I think I got a handle on things here, right? So, but look, so on top of the institutional money coming in, understand that the rest of the retail speculators are going to come in, and each time one of these rallies happens, you're going to see even more retail speculation. You're going to see even more institutional involvement. You're going to see both sides increase. And it's just fascinating that you're seeing the beginning of this driven. There seems to be some evidence anyway. There seems to be some evidence that it's largely being driven by institutional movement, in conjunction, sure, with some retail speculation. But the retailers, man, they haven't even begun yet. So that's why what's amazing to me, and the point that I'm really trying to drive home on this, is that when all the rest of the retail speculators jump in, I can absolutely foresee the price of Bitcoin far blasting past its all-time high, and same for XRP. Why not? It reached, again, a level of $3.92. Why can't it reach $5, $10, $15, $20? And again, with the understanding that as more retail actual utility takes place with everything that developers on top of the XRP are doing, such as Ripple, and then you got, of course, there's Omni and there's Coil. All that's going to require the usage and holding of XRP by certain players. Banks don't have to hold XRP for the purpose of what Ripple's positioning XRP to be used for. But there's going to be more and more XRP used, and so as the utility phase really starts to kick in, I think that's when you'll see the most wild XRP pricing. And I don't know how long that would take. Would it be 5 years or 10 years or 20 years from now? Because I see XRP and the XRP ledger being around for decades and decades to come, as utility kicks in. Again, what its native digital asset XRP is going to do in terms of price, don't you? I mean, it's speculation. It's going to go way up, right? And so I'm an XRP bull. That's what the heck I think is happening here. And don't forget this too. I would like to mention this, and then I'm going to wrap up the video here. This is another point that they wrote about in Cointelegraph. And this is fair. And this will affect everything else too, not just Bitcoin, but the subheading here. Bitcoin reward halving still 11 months away. Let me read this little piece here. The latest rally to 5 figures is also happening way before the Bitcoin block reward halving set for May 2020. This is when mining block rewards will be cut from 12.5 to 6.25 Bitcoin, thus reducing the Bitcoins minted by miners who are naturally market sellers. Interestingly, the previous halving event occurred in the summer of 2016, or more than a year before the price skyrocketed. This time, however, Bitcoin/USD appears to be front-running the event, as the halving is still 333 days away. A popular Bitcoin market analyst known as Plan B suggests that investors may not be waiting this time around for the expected reduction in supply. He added, front-running would be in line with efficient market hypothesis. If you believe S2F and that Bitcoin will be $50,000 May 2020, why wait? And that's the point I wanted to make, part of it anyway. So historically, we look back with the block reward for Bitcoin being reduced, that it caused, of course, you know what that does, supply and demand. There's less Bitcoin available, price goes up, of course. But I think this time people understand that it's coming, and the hypothesis by many in the crypto space has been, and I might subscribe to this, it's like maybe this time, because there's a greater understanding of how this all operates and there's more historical record, maybe it's more likely that the way in which it's going to affect the price of Bitcoin will largely, maybe not entirely, but largely be baked into the price prior to the halving occurring in the first place. And so that's a fascinating concept from my perspective. Additionally, understand that as this is occurring, whether it's baked in, which means maybe people are starting to invest now as a result, maybe you'll see some of it actually when the halving occurs, okay, some or all of it, whatever. But understand, whether it's happening now or it's happening then, it's going to affect the price of every single other crypto. So if it's happening now, super duper, but that's going to be baked into the price of everything else, if that's the case, including XRP. And I found that interesting enough to share with you guys. So let me just wrap this up. That's the vast majority of what I wanted to cover. Just exciting times with all the price action occurring here. If you have any thoughts, please drop them below. I love interacting with you guys. And want to note again, I am not a financial advisor. Please do not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea.